Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier been traded in a volatile manner following the sell-off from the 26,000 psychological level. Since then, we are seeing a renewed volatility on the Dow Jones Index as it plunged below the 24,000 before finding some support along the 23,500 points level. The 23,500 points level is also coincides with the previous support level during the April and May period. And on overnight itself, we are seeing a bullish harami candle was being formed on the Dow Jones Index as the Dow closed about 0.4% higher after clawing its way into the positive territory in the 11th trading hour. For now, let's see how the Dow recovers to above the 2400. If we can find some of the recovery above the 24,000 psychological level, then we might see further upside or further technical rebound on the Dow Jones Index towards the 25,000 psychological level. In the meantime, a fall below the 23,500 will see a next wave of correction towards the 23,000 or even towards the 22,000 psychological level on the Dow Jones Index. Similarly, on the S&P 500, the S&P 500 has earlier head towards the 2800 psychological level before staging a pullback below the 2600. If the 2600 level fails to hold, we are seeing the follow-through selling pressure on the S&P 500 towards the 25 level before staging just a minor recovery as the S&P 500 just closed about 0.22 points on positive 0.01% overnight. For now, let's monitor to see how the S&P 500 for the recovery towards the 2600. If the 2600 fails to hold, then we might see further pullback below the 25 before heading towards the 2500 psychological level. In the meantime, should the 2600 level were to be breached, then we could see further recovery on the S&P 500 towards the 2700 psychological level. All in all, should there be any recovery in the US stock markets, any recovery will be just taken as a technical rebound play as both the S&P 500 and the Dow Jones Index has been forming the lower high and also the lower low formation over the past 2 to 3 months trading period. Okay, some updates on the crude prices. The crude prices continues to endure a volatile trading session after a sharp plunge since the early part of October towards the 50 US dollars per mark. We are seeing a healthy consolidation over the past 2 to 3 weeks trading period between the 50 towards the 54. However, we did not see any further recovery from that point onwards, and instead the next wave of a sell down was noted on the crude prices as crude prices has plunged about 7% on overnight, closing to its lowest level since the 16 months back. For now, we might see further pullback on the crude prices back towards the 45 or even towards the 40 level, while any recovery from now will be just taken as a technical rebound play with gains likely to be limited towards the 50 or even towards the 54 US dollars per barrel mark. All in all, similar with the US stock markets, the crude prices is forming the lower high and also the lower low formation, implying that the downtrend is still intact on the crude prices. Okay, some updates on our local front. The FMKLCI has earlier been traded to along the 1700 psychological level, but it did not close above that. Since the rejection along the EMA 9 and also the EMA 20 level, we are seeing the FMKLCI has pulled back below the 1670 and subsequently headed towards the next support along the 1630 before staging just an intraday recovery yesterday. On the FMKLCI right now, things appears to be still quite negative as the FMKLCI is also forming the lower high and also the lower low formation over the past 3 to 4 months trading period. For now, let's monitor to see if there's any recovery on the FMKLCI, but gains will likely to be just capped towards the 1670 level. If the 1630 level fails to hold, then we might see further pullback on the FMKLCI towards the 1610 or even towards the 1600 psychological level on the key index. On indicators wise, everything appears to be still quite negative, as you can see that after following the pullback below the 1670 level, we are seeing the MACD indicator has really issued a sell signal, and subsequently the RSI also maintains its position below the 50 level as well. On the broader market wise, we are seeing the broader market continues to tank, despite the FMKLCI appears to be finding some of its support. We are seeing the lower liners continues to tank for the 11 consecutive trading days, as it has fallen below the 11,200 points support level. If the 11,200 points level fails to hold, then we might see further downside on the lower liners back towards the 10,000 psychological level, which was located during the September 2011. So for now, the lower liners appears to be we might see further downside. But should there be any recovery after following 11 days of sell-off? Any recovery will be just kept minimal towards the 11,600 points. So any recovery from now on the lower liners, we have to adopt the selling into strength strategy. On stocks wise, we can watch out for firstly end-to-end. End-to-end has earlier made a very strong rally towards the 1 ringgit and 35 or 36 cents to 1 ringgit and 37 cents level. However, the recovery did not last long, as price has pulled back below the 1 ringgit and 3 cents. After retesting the 1 ringgit and 3 cents level on twice, we are seeing the end-to-end has failed. The 1 ringgit and 3 cents failed to hold, and end-to-end subsequently pull back towards the recent low of 82 cents before staging a recovery. After 2 weeks of pullback, we are seeing end-to-end has formed a bullish engulfing candle accompanied by some of the high volumes being traded, as price recovered its past week's losses before retesting the EMA 20 level. For now, on the end-to-end, we might see further upside on end-to-end. Firstly, to retest the 1 ringgit and 3 cents, that will be the immediate target price or the intraday target price for now. Once the 1 ringgit and 3 cents were to be breached, further upside will be seen for end-to-end towards the 1 ringgit and 19 cents, or even towards the 1 ringgit and 30 cents level. Your stop loss point will be located below the 93 cents, and if you can take further risk, the final defense will be located towards the 82 cents level on end-to-end. With the price forming the bullish engulfing candle yesterday, we are seeing the MACD histogram has turned green, whereas the RSI is approaching the 50 level after recovering from the oversold position. On our Berjaya asset, our price is still on a downtrend, so any recovery from now will be just taken as a technical rebound play. Berjaya asset has earlier retraced towards the recent low of around the 24.5 cents level before staging a sideways movement over the past 2 to 3 months trading period. But throughout this period of time, we are seeing the MACD indicator has been forming the higher high and also the higher low formation. For now, on our Berjaya asset, we are also seeing price has already formed a bullish engulfing candle on yesterday, accompanied by some of the improvement in volumes being traded. For now, let's monitor for the breakout above the 29 cents. Should price breach above the 29 cents, we can trade Berjaya asset towards the 31 cents or even towards the 33.5 cents level. Your stop loss point will be located towards the 26 cents level on our Berjaya asset. Should price breach above the 29 cents over the near term, we could expect the MACD indicator to issue a buy signal. The RSI also could be rising back above the 50 level on Berjaya asset. On our CMMT, price is also still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Price has retraced from the intraday high of 1 ringgit and 29 cents levels towards the recent low of around the 1 ringgit psychological level. After touching the 1 ringgit psychological level, price appears to find some of the stability over the past 2 to 3 weeks trading period on our CMMT, accompanied by some of the improvement in volumes being traded over the past 1.5 months trading period compared to the earlier part of the month. For now, let's monitor for the breakout above this consolidation between the 1 ringgit towards the 1 ringgit and 4 cents. Should price breach and also close above the 1 ringgit and 4 cents, we can trade CMMT towards the first target price at the 1 ringgit and 9 cents or even towards the 1 ringgit and 17. Your stop loss point will be located below the 1 ringgit psychological level on CMFT. Things appears to be quite positive on the indicators. As you can see, the MACD indicator appears to be forming the higher high and also with higher low formation, with the MACD histogram turning green yesterday, whereas the RSI is retesting the 50 level. Last two company for today, firstly will be Destiny. Destiny has announced pull back towards the recent low of around the 20.5 cents level before staging a technical rebound towards the 36 cents. It recovered towards the 36 cents, however, there's no follow-through buy interest as price rejected the EMA 120 before sliding lower. After hitting the recent low of around the 12 cents a level, we are seeing price has staged the recovery pattern. We are seeing a sharp sell-off on the 3rd of December, but there's no follow-through selling pressure, and instead Destiny continues to recover and also appears to be closing above this gap down formation of the 16.5 cents level. For now, we could expect further recovery on Destiny towards the first target price at the 21 cents. Until we can see a breakout pullback and continuation pattern above the 21 cents, only we can confirm for further recovery, or else your stop loss point will be trailed towards the daily EMA 9, which is currently located at the 15.5 cents level on Destiny. Last company for today will be MISC. MISC has again hit the recent peak of around this 7 ringgit and 10 cents level. Subsequently, price has pulled back, but during this period of time, we are seeing a healthy. This could be taken as a potential healthy breakout with improved volumes, pullback with some of the declining volumes, and a potential recovery pattern. Or you can take this as a breakout, pullback, and the continuation pattern for MSC. For MSC right now, let's monitor for this trend line breakout or this potential symmetrical triangle formation breakout, given that price has already formed a bullish engulfing candle yesterday as price closed above the EMA 9 level, accompanied by some of the mild improvement in volumes. Should price breach above this symmetrical triangle formation of the 6 ringgit and 19 cents, we can trade MISC first towards the first target price at the 666 or even towards the 7 ringgit and 10 cents. Your stop loss point will be located below the 5 ringgit and 90 cents level on MISC. Should price breach above this symmetrical triangle formation of the 6 ringgit and 19 cents level, we could expect the MACD indicator to issue the buy signal, whereas RSI could be rising back above the 50 level as well. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some question here on firstly is DRB. DRB earlier we thought that the price could breach above the 2.20 cents level, but price did not breach above that, so there's no action being taken, and price subsequently plunged below the 2.07 cents level. So if you are accumulating on DRB during that time, then 2.07 cents will serve as the support level. If you did not manage to sell, then the recent recovery towards the 2.07 cents will be an opportunity for you to sell. If you still unable to sell, and subsequently the DRB Hicom continues to plunge lower towards the 1.66 cents level. Yes, he has retested the 1.66 cents level on yesterday. For now, let's monitor for the 1.66 cents support level. If the 1.66 level fails to hold, then we might see further pullback or further retracement on DRB Hicom towards its next support, located at the 1.53 cents level. So let's monitor for the 1.66 cents level or support. But if we can find some of the recovery pattern from this point onwards on DRB Hicom, any recovery from now will be just taken as a technical rebound play, and you should adopt the selling to strength strategy with your first target price located at the EMA 120 at the 1.85 cents level or 1.87 cents, followed by the 2 ringgit and 7 cents or 2 ringgit and 6 cents level on DRB Hicom. So for now, any recovery will be an opportunity for you to exit on this stock, given that price is already forming the lower high and also the lower low formation, implying that the downtrend is intact. As you can see that the EMA 9 is below 20, below 60, and also below the 120 level. On a target, price has been traded on a sideways manner after the recent rally after the preference rise issue. Price continues to hover on a sideways manner, but we are seeing some of the shooting star candle was being formed on a top gap recently, implying that the upside potential upside is quite limited for now. For now, the upside will be just capped towards the intraday high of the 25 cents. Any higher will see gains likely to be limited towards the 25 cents or even towards the 27 cents level. Your stop loss point will be located towards the EMA 9, which is currently located at the 22 cents level on a target gap. If you want to take further risk, the final defense will be located towards the 20 cents level on top gap. Things appears to be quite negative, not very positive right now. As you can see that the MACD indicator has been turning flattish, MACD histogram has been turning lower, RSI is already overbought, signaling that it could be on a pullback phase. But any pullback for now will be healthy pullback, given that there's a lot of volumes being traded during the rally phase. During this sideways formation, we are seeing some of the declining volumes, implying that the buyers during this period of time are still in position on top gap. So any pullback for now will be a healthy pullback before the next upward rate to resume. If there's no further question, then we'll end the morning briefing for today. Thank you.